In the halls of Capitol Hill, a familiar debate has intensified once more as lawmakers grapple with public scrutiny over their personal investments. Multiple bills aimed at curbing congressional stock trading have surfaced in recent months, reflecting growing bipartisan pressure to address perceptions of insider advantage in the markets. Republicans, including Senators Bill Cassidy of Louisiana and Pete Ricketts of Nebraska, introduced the Stop Insider Trading Act in mid-March 2026. This measure would prohibit members of Congress, their spouses, and dependent children from purchasing new publicly traded stocks while requiring a 7-day public notice before any sales. A companion version advanced earlier in the House under Chairman Brian Steele of Wisconsin, backed by Speaker Mike Johnson, allowing lawmakers to retain existing holdings but imposing notice periods for disposals. Proponents argue the legislation restores trust without deterring experienced private sector talent from public service. Democrats have countered with their own proposals. In early March, a group led by Representatives Haley Stevens of Michigan and others unveiled the No Getting Rich in Congress Act, which seeks a broader ban on buying and selling individual stocks by the president, vice president, members of Congress, candidates, and their immediate families. Earlier, Senators Kirsten Gillibrand and Ashley Moody, along with House counterparts like Chip Roy and Seth Magaziner, pushed the Restore Trust in Congress Act, calling for full divestment of individual stocks during tenure in office, with strict timelines and penalties. These efforts highlight a divide. Some favor partial restrictions focused on new purchases, while others demand outright bans to eliminate any appearance of self-dealing. Public frustration stems in part from ongoing disclosures of trades that sometimes align closely with committee oversight or major policy discussions. Reports have highlighted senators whose transactions overlapped with industries under their jurisdiction, from defense to technology. High-profile names, including former Speaker Nancy Pelosi, continue to draw attention for timely moves in big tech stocks like Nvidia, Amazon, Alphabet, and others, often executed through options or managed by family members. In 2025 alone, congressional trades reportedly reached hundreds of millions in volume across thousands of transactions, fueling calls for reform even as President Trump publicly endorsed stronger measures during his State of the Union address. Despite the momentum with discharge petitions, hearings, and cross-aisle co-sponsors, action remains stalled in committees. Critics of the narrow Republican bills point to loopholes that permit continued ownership and sales with advance notice, while supporters of comprehensive bans argue that anything short of divestment fails to fully separate lawmakers from potential market influences. A related bipartisan push has also emerged to restrict insider trading on prediction markets, extending guardrails beyond traditional stocks. As these proposals linger without floor votes, the conversation underscores a deeper tension, balancing ethical standards for public servants against the practical realities of attracting talent to Washington. Whether Congress will deliver meaningful restrictions or see another cycle of debate without resolution remains uncertain, even as everyday investors and watchdogs track every disclosed trade for signs of advantage.